Well, hello there, Maverick traders. This is the Currency Room. This is Rob, and I will be flying solo today. Ankit is on vacation. We have 1 day left in August, then we close the books, do payouts, and then we move on to September. And I'm very happy every year when August is done because August is typically not the best trading month. September is usually fantastic. In this session, we're going to talk about all the news coming up. We got lots of news coming up. We've got some seasonal things happening. We're going to take a look through all the currencies, score them from +3 to -3, and then we're going to talk about where to hunt for trades this week.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
All right, first story is equities. Equities just keep going to all-time highs, all-time highs. We had 3 new all-time highs this week. We had a sell-off on Friday, knocked the market down to flat. But look, money is pouring in, and it's not like it's a ton of money pouring in. There's just an absolute lack of selling. There's an absolute lack of fear. Gold closed at an all-time high. What is moving it? Well, there's lots of things. Dollar weakness, FOMC rate cuts in other countries, and we're getting this slightly risk-off move. And what I mean by that, it's kind of weird to say new all-time highs in equities and say there's a risk-off move. It's happening under the surface. Right now, the 11 largest stocks make up 40% of the S&P 500. Those are called the Mag 7, or want to call them the Mag 11, that's fine. But the Mag 7 are the things like the NVIDIAs, the Microsofts, the Googles, the Amazons. These stocks have taken a hit. They've taken a hit, and underneath the surface, we're actually seeing a little risk-off move, and that's really hurting the cryptos. Cryptos are no longer tied to the SPX. They're more likely tied to the Mag 7 at this point. As far as economic reports go, this was the big report this week, in my mind. The Australian CPI, much hotter than expected. Remember, everyone's been thinking that the RBA is going to be very dovish. This thing came out substantially higher. That at least puts doubt in the mind of traders that the RBA is going to be cutting rates. We also had Canadian GDP. It was a miss. What did the CAD do? Went up on the news. We'll take a look at the CAD. And then we had the US core PCE price index came in as expected. And you know what? The market really kind of took it in stride, but I think they were hoping for a little bit of good news. Remember, the September rate cut is coming most likely, but the FOMC minutes showed that the governors are very reluctant to cut rates. I think we're going to get one and done, and the market doesn't really love that. This number right here, 0.3 on the core PCE price index, pretty much says that it's going to be a one and done, at least for the next couple of meetings. All right, let's take a look at some of the other charts here. Let's take a look at some of the other numbers. Overall, the S&P was virtually flat on the week. World currencies or world stocks down a little bit more. Take a look at the hit that crypto took, 7.32. Gold up 2%. I think that's really one of the biggest stories happening in the markets at the moment. Here is the S&P. As you can see here, we had 3 strong days, Tuesday through Thursday. We had a weekday on Friday. Okay, this is still a bull market. There's nothing negative to say here about stocks. They're still in a bull market. Let's move on to the movement we saw in the currency market. I actually really liked the price action this week. And we're going to take a look at all these charts here in just a second. But let's take a look at risk on, risk off. So very typical risk on, risk off with equities is that when equities fall, you get the yen and the Swiss franc as the best currencies. And then when the markets fall, we've been getting the euro and sometimes the pound. Take a look at all of these currencies. All of the quote unquote risk off safe currencies, all down this week. What was up? CAD, Aussie, and Kiwi, and especially on Friday. Friday was a big down day. Guess what was still up? Aussie, Kiwi, and CAD. This is telling me that the currencies of safety are no longer acting as currencies of safety, and that we're likely going to get probably some stronger risk-off moves out of the growth currencies, which it's been a very long time waiting for this to happen. We'll have to get some confirmation this week, but I'll talk about it in the charts. Crypto just got hammered, and really we're going to take a look at the inverse correlation with gold here. I think the higher gold goes, the worse it goes for crypto. We're seeing sell-offs across the board. And speaking of that, let's jump right into the cryptos here, because here is the crypto basket. The 4 cryptos we look at equally weighted, and you can see we're in some technical problems here. We really broke through this support. I know we're barely through it. I need to see a couple more candles. But over here, we held the 50-day moving average. We're not going to hold it this time, it looks like. Could we have another rundown all the way down to this next level? That's about 4% lower. I think it's a possibility, but it is absolutely breaking down. I'm a big believer in correlations, and having correlations really run your currency and crypto trading. All right, this is kind of a mess here, but let me tell you what it is. The candles here are the cryptos. The red line, or the maroon line here, is gold. This is gold. And the purple line is the S&P. Let me show you the strongest move right here was when all 3 were moving the same direction. Gold, markets, and crypto all moving. And you could see once gold deviated, crypto and equities continued to move higher. And then look at how tied equities and crypto were to each other. Look at that move down, pretty much in lockstep. So the lockstep up move with the SPX and down move with the SPX. Here's the problem. The SPX bounced. And look at this right here. This week, we got a bounce in the SPX. We did not get a bounce in the cryptos. And then right here, we're getting a negative correlation in gold with cryptos. You can see the day the cryptos bottomed, gold bottomed, and we've seen negative correlation on gold and cryptos from that point here. So look, things are actually really out of whack here with cryptos. I don't like the trade whatsoever. I really like when they're all acting in unison. We got gold going higher. We got S&P going higher. It really makes for the best trades. And right now, gold going higher, S&P on a pullback, crypto's underperforming everything. No thanks. I will just go hunt elsewhere for some trades. We've been saying this for the last couple of weeks. I'm finally glad I don't have to say it anymore, is that usually August is a slower month for trading, lower volatility. And then after Labor Day, September becomes a great trading month. And I've told people for the last 2 weeks, hey, let's not go crazy with trades. Let's keep the trades really low. Let's keep the overtrading completely out of there. And let's just wait till September. Here we are. It is here. You're going to have to wait till Tuesday because the first 2 days we've got bank holidays in the US and Canada. Will there be an active Euro session? Maybe for 5-6 hours. But really, I'm going to say that the trading week starts for me on Tuesday. First up, GDP out of Australia. We just got that hot inflation print. If we get a good report, and take a look at this, forecast is for 0.5%. If we get 0.5% or better, I like this Aussie quite a bit this week. One of my favorites here. Thursday CPI of the Swiss franc. Go ahead and ignore this. We've had readings all over the place with the Swiss franc, and the Swiss franc doesn't do anything other than go up. So for me, it's just a no trade here. And then Friday, we have jobs reports out of the US and Canada. This is a big report. Sometimes I say they're big, sometimes they're not. Right now, the market is on edge. The market is hoping and praying the economy's good. We just got a bump up in GDP this week from 3% to 3.3 in the second quarter. People are still really worried about economic growth. If this number comes in light, remember the Fed said at Jackson Hole, we are now worried about both inflation and employment. They have not said that for years. They've just said they're worried about inflation. Now they're saying they're worried about employment too. If the Fed has to cut rates because they think the economy is weakening, that's actually bad for the economy. That's bad for the stock market. That's bad for everything. The best way for them to cut is if the economy's strong and they cut rates. That's actually a positive cut. I remember as the first time as a trader when I was younger in 2000, they had only raised rates. I started trading in 97. They had only raised rates from 97 to 2000. And in 2001, in January, they cut rates for the first time. And everything I thought I knew about economics, it did me wrong because the Fed came out and cut rates by 50 basis points. And then 2 days later, they cut it another 50 basis points. They cut 1% in the matter of 2 days. And I thought, equities are going to bounce here. Remember, 2000, they crashed. I went long equities pretty strongly. And there was like a 3-hour bounce. And then it just continued to go down another 10%. And I remember thinking, why did that happen? And now I understand if the Fed is cutting rates because the economy's falling off a cliff, it's not a positive. It's a real negative. So look, if this jobs report comes out light and the Fed all of a sudden says, hey, we have to cut rates, that bond yield is going to drop from 4.25 down to 4.1, 4.0, and that's going to cause an exodus from equities and cause a risk-off move. All right, let's go in and look at all of the currencies, score them from +3 to -3. Starting off the cryptos, I don't like the basket altogether, but talk about what I don't like the most is Bitcoin. Bitcoin broke down below the 50-day moving average weeks ago. And you can see it has led everything to the downside. It is nothing but bearish. There is nothing bullish on that chart. Bitcoin Cash, it just now broke below the 50-day moving average, came up, could not break it, and then came back down. This is not looking great, but it's definitely not as bad as Bitcoin. Bitcoin is by far the worst one. Then we come to Ethereum and we're like, oh, it still looks okay. Now look, okay doesn't mean to run out and buy it, but you can see here, okay, we broke down below the 20 that's really held it up for the last little bit. We'll probably come down to the 50. I assume that what's going to happen is Bitcoin, Bitcoin Cash, Litecoin are all going to go crashing, and then Ethereum is going to close down near the 50, and then we're finally going to get a bounce. And by far, Ethereum is going to be the one to buy. But right here, right now, it's absolutely a no touch. You can see Litecoin looks just like Bitcoin Cash. It's now breaking down. It's 50. Let these things fall. Do not touch them. Going into Forex, here is the dollar. Now, if you take a look at the daily chart on the dollar, we can see that we've made 2 runs and then come back to the moving average. A run that was a little lower, come back to the moving average. We take a look at the 4-hour chart, we can see that we are definitely just staircasing down. I want to be short dollar. I really do. But I can't do it yet because my rule says I cannot be short unless it's below the 50-day moving average. It is not there yet, but I do like dollar short, but it's a 0 on the trend score, so I have to wait. Next up is the yen. Now the yen gave us a little breakout right here, but I wanted you to take a look at the price action since that little breakout. It hasn't been down, but it definitely hasn't been up. And remember, Monday we had a risk-off day. What did the yen do? Go down. Friday we had a risk-off day. What did the day do? Went down. You can see we virtually went down almost every single day. I want to short it as well. Just like the dollar, I want to short it as well, but I need that 50 below I need that chart below the 50-day moving average. I want to be short yen, but I can't be short yet. Swiss franc, look at the strength in this thing. Nothing but bullishness. Yeah, look, I don't want to buy it here. It's not a buy, but it's definitely not a short. So I'm just going to go ahead and put that on the shelf. Euro got hit this week with some news out of France. I think the French are going to have elections again, which always creates some uncertainty. We got that pullback, but take a look at the support we got here. On the 4-hour chart, we're getting some signals that, okay, maybe the euro is turning. Again, I think it's a little bit too early, but if there is a risk-off move, this is really the only thing that's working. I mean, take a look at, of all the risk-off currencies we're looking at, the euro has been the only one that's been up. I guess the Swiss franc was up a little bit on Friday, but they're acting like risk-off currencies on Friday. The pound is not. The pound basically sold off every single day, and on Friday it got even worse. I am not looking at pound here for long whatsoever. All right, I want to spend as little time on the CAD as possible because I've said this for the last couple of months. The CAD is not tradable. However, I see a couple of our traders trying to trade CAD, and it's just like, why? Why are you doing that to yourself? Yes, you got one decent candle last week. The rest of the candles, absolute garbage. They didn't go anywhere, and with long wicks, you're going to get stopped out on everything, longs and shorts. It's just a terrible trade. Just avoid CAD altogether until we get better scores. Then you can trade it. There are other things that look pretty good, and this is one of them. The Aussie, to me, is the best looking currency out there, and I really like that we got that CPI report. And then take a look. It was nothing but up all week long. Whether the equity markets went up or went down, it didn't matter. The buying was coming into the Aussie. However, take a look at the candles. They all have long lower shadows, which means I really want to be a buyer on pullbacks. I don't really want to be chasing Aussie. It looks like it's going to give me a chance to get into it. I don't want to be chasing it at the top of candles. I want to be grabbing it at the bottom of candles off of pullbacks. We will absolutely look at that on charts. And then coming to the Kiwi went up this week. It still looks like garbage, still looks like trash. It probably continues to bounce, but again, my rule, I do not go long if it's below the 50-day moving average. So sorry, Kiwi, I am not looking at you at all this week. Looking at our trend score, we've got Aussie, Euro, and Swiss franc. So this is very simple to me. Let's say next week we get a big sell-off in equities. Let's say it's a big, nasty, ugly sell-off, and even the Aussie probably can't withstand that. I want to be long Euro and long Swiss franc. There's no doubt about it. That's where I want to be on a sell-off. Let's say equities go up next week. Let's say equities continue to go up. They strengthen. Aussie is 100% the place to be. And then if you want to look at a crypto trade, if cryptos can catch a bid and have a bounce, Ethereum is the one to buy. I'm not looking to make that trade. I am really looking at Aussie. On the short side, what do I like? I really want to short dollar and yen. That's really where I want to be short, but I can't get there yet. So early on in the week, I've got to take a look at things like, Euro Kiwi, Euro CAD. Even though Kiwi and CAD are having a little bounce, that's just all there is at the moment when I take a look at the trend score. But right here, right now, Aussie, Kiwi've got the momentum, and the dollar and the yen are falling. This is the pairings I want to be in. I want to be long Aussie dollar, long Aussie yen. Just my rules prohibit me from being there yet. So let's go take a look at some charts. Let's talk a look at maybe when these things are going to happen, and we can get ready for some setups. All right, first up, I'm going to pair up dollar versus yen, because I want to know which one is looking weaker, which one is looking the weakest. And you can see dollar and yen through all of August were virtually identical. Yes, on some days one was better than others, but overall weaker. However, you can see the dollar starting to trade down at the bottom of the range. If this breaks, then I want to be short dollar and not short yen. If it holds, I actually want to be short yen because it looks like they're just vacillating against each other. So if we take a bounce here, I'd rather be short yen. So let's work on that premise right now, that the yen is going to now weaken against the dollar. That's where we want to be short. Here is Aussie yen. And I'm going to draw in some candles here, or some lines. And whenever you draw in lines, I've been doing this for a long time, and people are like, oh, it's so clear now. drawing these lines, it's great because you do get some idea of what's going on, but you could snap lines on virtually any time frame and make sense of it and be like, oh, now I see what's going on. It's kind of, I'll use the term bullshit, but sadly, it's the only bullshit we can follow because it is objective. So this is a bull flag pattern. So if you tilt your head to the side, you can see the flagpole on the way up and then a really shallow 3-wave downtrend. And that's exactly what we got. And the buy point is a breakout of the bull flag. So look, I like this chart. This was where, again, I did my relative strength, and I'm not looking at any other chart other than Aussie yen. I come onto Aussie yen daily. It's a bull flag pattern that I really like to trade. Now it's just a matter of where's my entry point? And you can see entry points, you're not getting an entry point. You're getting little tiny pullbacks, but they're not very good. To me, this is just an entry right now, right here, right now. Everything is going your way at the moment. If you get a little pullback early next week, I think that's absolutely a great place to get in. If you don't, I still think it's a great place to get in. That being said, remember, the yen for me has not gone below its 50-day moving average. That is a requirement for me to make this trade. So I will not be making this trade first thing in the week. I need that confirmation. All right, now this is a risk on move. So if there's a risk on move, this is where I want to be. If there's a risk off move, so let's say, remember, we're coming up on the worst 6-week period of equities. If we get a crash in equities, then I think Euro is a place you want to be. And I think Kiwi is a place you want to be short. That's the weakest currency. And if we take a look at Euro Kiwi, we can see that there's a big pullback happening, but this is still an uptrend on the daily chart. We could pull all the way back into 197.50. I mean, we're right in here. If we can get some candles, the bottom out and move higher, to me, this is a good trade on a risk off move in the markets. So risk off move next week, I'm looking at Euro Kiwi to the long side. And let's take a quick look at crypto. Like I said earlier, Ethereum is the only one I'm interested in. And it's going to need to be a big bounce in both. Again, I want the S&P moving, I want gold moving, and I want the cryptos bouncing. Ethereum, there's just really nothing to look on a chart here because everything is going lower. And there really isn't any support on this until about 4,050. Looks like 4,050 is his next support. Does it go down another 300 points, virtually another 8-9%? I don't think it does. If it does, I think that means the market's crashing and you don't want to buy it down here. So again, I think I have no idea where it's going to bounce. It's all just a guess here at this point. So sorry, I can't give you much analysis on cryptos here. You're just going to have to wait for that bottom. For those of you who have been patient, your patience has paid off. We are now here. Trading is substantially better typically. I've been doing this for 28 years. I hate August trading. I hate it. I always have, and I probably always will. I'm always very, very happy when it's over, Labor Day is over, and then volatility typically picks up and it's a great trading environment. So hopefully that's the same this year. Be on your toes. Let's go make some pips. Goodbye, everybody.